Contrary to what many people think, the SBA does not loan money directly to small business owners. The loan actually comes from a bank, and it's backed by the SBA, allowing the bank to take a little more risk than they otherwise may do. Today's guest has tips if you are applying for an SBA loan at a bank. Brandon Hinkle is the CEO of PluraFinancial.com, a free online matchmaker between banks and small businesses seeking commercial loans. Great to see you.
Thanks for having me, JJ. Great to be here.
So that's the biggest misconception, right? I'm getting an SBA loan, it's coming from the SBA.
That's right. A lot of people assume that when they're getting an SBA loan, the check is coming from the government or from the SBA, but that's not the case. They're actually working with the bank. So basically what happens is the bank will, rely on the guarantee from the SBA, but you still have to get a loan decision from the bank. They still have to look at the credit criteria and the cash flow, and then it's really designed to help those people that have a good amount of cash to repay the debt, but maybe don't have the collateral or years in business to justify the loan, so the government will help.
And when you go to the bank, would you go and say, hey, I'm looking for an SBA-backed loan, or would they steer you in that direction once they see your business plan and talk to you?
So if you go to the SBA will say, you've got to go talk to an SBA lender, and you've got to go talk to, let's say, U.S. Bank or some other banks out there that do SBA loans. Mm-hmm. And then those banks will say, the most appropriate deal for you is, let's say, an SBA called a 504 loan or a 7A loan, or there's certain SBA products they'll recommend. So the SBA will literally tell you to go to a bank.
Got it. And that's the other thing. There are all kinds of products. It's not just one kind of SBA loan. Should you do that research ahead of time, or should you rely on the bank to steer you in the right direction?
You should definitely do some research before time, but rely on the experts, rely on the bank to really help steer you in the right direction. Because, again, there's the 504 loans, which are really meant for real estate and fixed assets. And then there's the working capital loans that are really SBA 7A loans that helps with, leasehold improvements and things like that. So you really want to make sure you're getting the right product for your business.
If I could go through this process and get a non-SBA loan or an SBA loan, is there a benefit to one or the other? I mean, sometimes you have no choice, but if you did have a choice.
Absolutely. I mean, one example is, so the SBA 504 loan, if you're buying commercial real estate, you can put 10% down with an SBA loan because there's less risk for the bank because the government is basically co-signing the loan. They're willing to go a little bit further, so the amortization will be farther out, and you have to put less equity down. So if that's important to you, if you want to put a little bit of equity down, the 504 is much better. However, people have the misconception that the rates are always cheaper with SBA, but that's not true. So it depends what you're looking for, I would say, but a lot of times the SBA is a great product if you're eligible and you can get it.
Are there any downsides to it? Is there more paperwork? Does it take longer?
There's a lot more paperwork. Sometimes the rates can be higher. Sometimes, like with an SBA 7A loan, it's generally a floating interest rate, which isn't as favorable as a fixed interest rate. So there's definitely some downsides, but I think there's a lot more upside.
Okay, so when you go in, obviously what we talked about, the banks can take a little bit more risk on you, but you're still going and you're applying for a loan from the bank. So some things you need to look at. You say first, make sure you're in good standing with the state?
That's right. A lot of people don't realize until right before close that they forgot to pay a bill to the state or their taxes, so they won't be in good standing. And so things like credit reports, background checks, certificate of good standing with the state are all things you need to have in line before getting approved by the bank.
Okay, and then just like any other time of going into a bank, you need to have some sort of business plan and show some sort of traction?
That's right, especially for startups, because startups don't really obviously have financial history to go off of, so all the bank can use is your industry experience and your future plans. So you really want to make sure you have a business plan in place, have 3 years financial projections, a monthly balance sheet and income statement. You got to make sure you demonstrate that you know the industry, you've studied the competitors, and also a sources and uses. What I mean by that is basically a chart that shows what you're going to do with the proceeds from the bank.
Got it. And then finally fill out all of the application. That happens a lot. No, people just forget to fill out one section or think it's not important.
The banker's single biggest pet peeve is incomplete information. And what they'll do is they've got so many deals they're working on at one time. If you have an incomplete application, they'll put your deal in the penalty box and work on the deals that are complete. And they just don't want to waste their time.
Right.
So you definitely want to complete the loan application before submitting.
All right, Brandon Hinkle, thank you. This was great. Again, so many people think you're getting an SBA loan and they forget you're actually getting a bank loan.
That's right.
Backed by the SBA. Really appreciate it.
Thanks for having me.